Welcome to TQ Talks, where taxes meet planning. Here's your host, Craig White.
Welcome back, and thanks for joining me in another podcast. I hope you guys are doing well. As I discussed last time, I promised to have another headline from the One Big Beautiful Bill that gets a ton of attention. And of course, that's no tax on overtime. One thing that the One Big Beautiful Bill did do, is give a whole bunch of changes to the tax law, good, bad, and indifferent. I'm not going to weigh in on this episode or any episode probably about what I feel about it. I'm just going to tell you if these things work or not and how they affect your life. So today, I want to walk through what the overtime rule actually says, how it's applied, when you file your taxes, and why a lot of people are, going to misunderstand it if they aren't careful. And I'm just thinking out before I speak to you, man. This bill or this change where there's no tax on overtime, to me was honestly a good thing from a personal standpoint based on the trajectory of the economy, inflation, etc. The biggest problem I always have with these changes, and Trump is the only one that does these things apparently. I don't know the rest of these people to decide never to make any adjustments. It's insane. I don't think there's any thought beyond the beginning sector, meaning there's never a long-term strategy. It's always a quick Band-Aid, and it's frustrating. But we're going to get into it. I digress. When it comes to this deduction, it's a deduction on your tax return. It's not a change to how overtime is paid. Overtime still, right? Overtime pay is still income. It's still reported, and it's still subject to payroll taxes because people just continue to think, oh, we got no taxes on blah, and this is what's going to happen. No, nothing changes. I think where most of the confusion is coming in is that it's the qualification, like what qualifies. And so I think the language says something like only the premium portion of overtime qualifies for the deduction. And what the heck is premium portion? What does that mean? Well, if you're paid time and a half, only the half qualifies, not the entire overtime paycheck, right? Your base pay does not qualify. Only the premium above your regular rate qualifies. And it is only time and a half. That's it. So just like the tips deduction, this one is going to have dollar limits and income limits. The maximum deduction is $12,500 per year for single filers. It doubles up, right? $25,000 per year for married filing jointly for couples. If you guys filing together, it gives you the option or the ability to get up to $25,000, up to a $25,000 deduction. And just like the other one, which we talked about before, the phase outs or income phase outs are going to be the same. It's going to be $150,000 for your modified adjusted gross income for a single person. Double that thing down, $300,000 for married filing jointly. So as the income increases above those levels, you guys know it. The deduction starts to phase out, and of course, the whole thing can go to poop, right? Nothing's there. As always, this deduction is aimed at workers' overtime, right? Earning overtime, not income, not high-income earners. So it's much like most of the things in the bill. You're looking at lower to middle class individuals who are earning income, and they're trying to figure out ways to keep more of your money in your pocket. So I want to make sure we're very clear about what this does not do, right? Overtime is still subject to payroll taxes. Nothing changes there. Your Social Security, your Medicare, it's still there. Your employers still withhold taxes. They still report overtime as wages. It's still reported as income. Your paychecks don't magically increase because this bill was passed, right? It does not show tax-free overtime. That's not what this is. So nothing about your paycheck changes because the rule exists. Everything still stays the same. So what happens, or where the magic happens, right? You guys like saying that, is where it's when you file your taxes. So the W-2 is entered normally, overtime pay stays as included in your wages, and the deduction is applied separately on the tax return. The preparer does not change your W-2. They do not. The deduction happens after the W-2 is put into the system or the software, depending on what they're using, right? I think here's where most people need to pay a lot of attention. For 2025, the IRS is not, and I bold, capitalize, however you want to put it, they're not requiring employers to separately calculate or report overtime premium portions on the W-2, which sounds insane, because they meant about it. And I know we did a social media on TikTok. I can't think of all these things, LinkedIn, Instagram, and YouTube. We spoke about it and we broke this down where I gave examples with numbers, right? So you guys could understand how to calculate your own. But again, the emphasis was the fact that, as I just spoke to you about, it's not a requirement yet. The requirement is actually coming in 2026 for the employer to do it. But right now, for 2025, as you guys are getting the information from your W-2s, it is not mandatory. So if your employer did it, like I said in the video, kudos to them. Tell them thank you. If not, it's something that you might have to deal with. So that means that some payroll systems may voluntarily provide the details, others won't, right? You might have to use your paycheck stubs, payroll summaries. Some employers are giving employer reports, which are huge because you're going to need that information. So this year, documentation matters more than trying to do it automatically, meaning plugging it in and praying to God. If you don't have that information in, then there's nothing the computer is going to do for you. So like I said before, I've gone through the calculations or how to calculate that premium step by step on the social media. So you just have to check us, look for TQ Financial Services, and you could find the video where I'm walking through and showing the actual number or numerical example so you can know exactly what to do. So again, even though this is an employee deduction, business owners, which of course are the onus of what we do, that's the majority of our clientele, still need to care about it, just like the other ones we spoke about, because your employees are going to ask you questions. They're going to want to know what's going on. What's happening with the payroll? Did you guys make any adjustments? And this is extremely confusing if you put yourself on the other side, right? If you're trying to file your taxes and you're trying to ask questions and you have no idea what's going on, the business owner is the one that should provide some form of clarity. At least that's what I think. Not certain that that's going to happen, but it is what it is. So business owners out there, this is not a tax strategy. Right? This is not something for you. It's a compliance situation and a communication situation. If you want to be a good business owner and someone that people look forward to working with, understanding these nuances, not exactly how to do it, right? You can refer them to the tax preparer, but you at least need to give them some basic understanding about what's going on, because it's very important. So again, the value of this deduction is going to depend on how much overtime you actually worked, whether you're under the income limits, and whether the premium portion can be properly documented. This isn't something you're going to assume or you're going to guess, right? It's something that you have to verify. It has to be very specific. And so we're begging you to keep track, like I said, of those documentations, and make sure that you have it so that you can take advantage of something that is available to you. So the takeaway is simple. No tax on overtime does not mean overtime pay is tax-free. It means there's a deduction available for the premium portion when you file your return, which is still a big, big deal. Next episode, we'll step away, God's willing, from wages, and I'm probably going to talk about something that impacts business owners directly, which we've discussed before, but we continue to have the questions on it. It's entity structure and why planning, which is what we focus here at TQ Financial Services, matters more than deductions. So thanks for joining us. That's all for TQ Talks. Thanks for listening. Don't forget to follow us and, all that good stuff and where your podcasts are. Like, follow, share. My son will give you guys that information on the outro. We'll talk to you soon. Later.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.